momentum in philosophy is derived from the moment. This is the part that I like the best. I mean, I'm trying to show you that there's different ways of looking at momentum, but I like this idea of the moment, okay? Momentum of the moment, and that's what we're looking for. Okay, so in Forex trading, I define momentum as the direction of price in relation to the speed of the market. There's two different things. Let's say the market's falling. Okay, market. Remember 2155 is falling? So what you should be doing ideally is looking for opportunities to short as well. So the momentum is falling and price is falling, then it's centrifugal momentum. Okay? But there's other opportunities. What if the market's falling and price is way far away and is coming back? Well, it's centripetal. It's the centripetal. Imagine this. You have a yo-yo on the end of the string, then you let the yo-yo kind of fall so it's hanging at the bottom of the string. Then you start twirling around. Woo, 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 woo. Well, there's going to be a force that the yo-yo wants to fly away. Centrifugal force. But there's centripetal. It's also the string has force too. So you're either going with the market or you're going away from the market. And you can expect two different results from this. And that's the most important thing. Okay? Price naturally wants to go in the direction of the market. But it doesn't mean there's no opportunities. You can go against it, but it's less ideal. So in this example, I want to show you the 21 is clearly below the 55. So ideally, you're thinking about, I want to short, I want to short, I want to short. Okay? Great. So now you take the 5A cross, those red and black lines crossing, and you get a trade there, right? Right in here. You see that? Down, down, down we go. Now this is a trade opportunity too. If momentum's rising, you can go long, right? Nothing wrong with that, but it's less likely to work because the market's falling. But you can make money in there. But then, or if you're a very conservative trader, you can just wait for price to fall again and then short. Now in this example, you can make 75 pips. Hey, that ain't bad trading against the market. But I see that as a higher level of risk. You need to at least understand that if you're going to take the opportunity to trade against the market, you have less pips in the potential, and there's higher risk of price naturally wanting to go back in the direction of the market. So it's higher risk, less reward. Now, if you see it and you want to take it, fine, but just acknowledge that you're taking on more risk and less reward. Or you could just simply wait for your opportunity to short again. Okay? And I like doing that. I don't like centrifugal trading, but sometimes, it happens. Okay? But ideally, you short when the market's falling. Wouldn't that just be nice? Okay? So here's a 5-8 cross. Down, down, down you go. And guess what? What puts you in can take you out. Isn't that nice? How many times you've been in a 40-pip trade and then given it all back? It's terrible. It's absolutely terrible. I actually got distracted the other day. I made 100 pips on the euro-yen in about, 15 minutes. But I was doing an interview to publicize the book, so I'm like, okay, I moved my stop to break even. Hey, it's got 100 pips. And then sure enough, I go back to my charts and break even. I'm like, oh, man. But if I was watching my charts, I could tell that technically something changed, right? So if you have good momentum, stay in the trade. If momentum changes, you have an opportunity to exit. What puts you in can take you out, okay? And then it can pull back. This is where you usually are sweating bullets or losing money. And then you can wait for the next momentum shift to the downside, and you can take the shot again. Okay? You see what I mean? The 5-8 can put you in. The 5-8 can take you out. Just take the money off the table. Hey, these are 15-minute candles, so you're in for several hours, and then get out. MoveOn.com. All right. No momentum there. I call that braiding. You see how many times that 5-8 crosses? Again, that's in between the U.S. close and the Tokyo Open. Okay? There's just this quiet time in Forex. Well, that's what that is. You can see that there's no momentum. I call it braiding, like a girl's hair. Crossing, 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 and crossing, and crossing. Do not trade. Wait for something to happen. Just, what I often do is I set an alarm below and above that little range and walk away. And when my alarm goes off on my cell phone, I come back to the charts. I'm like, oh, because now The market has decided what direction it wants to go in, not me. I don't have to guess. And then I start trading in that direction. So in this case, Tokyo finally opens. 5.8 crosses down. 21.55 crosses down. Everything's down, down, down. Short, short, short. Or do nothing is what I say. Okay? But you can see how the market opens up and how price starts to fall. Your confidence should be high. You never want to bet against it. You just go with the flow. I like to say that I'm a cork in the river of life, right? In this case, in Forex. Just, another analogy, swim out into the middle of the current and float downstream. Don't even think about trying to swim upstream. It's too hard. Life's too difficult. Why do you need to add all that stress to your life? Just float. Enjoy it.